Measurement issues. Examples. Objectives. Students will be able to understand circumstances in which initial measurements can involve complexity and apply initial measurement guidance to examples involving inventory, revenue arrangements, and receivables. Also, students will be able to become familiar with the types and timing of subsequent measurements and apply subsequent measurement guidance to examples involving inventory and receivables. So let's look at initial measurement, arrangements with multiple performance obligations. When multiple goods or services are delivered in an arrangement, entities must determine, first, whether revenue can be allocated separately to each performance obligation, the recognition. Second, how the transaction price should be allocated, measurement. This example focuses on the second question, how to allocate revenue. Per ASC 60610, in an arrangement with multiple performance obligations, the transaction price should be allocated based on relative standalone selling prices. Per ASC 60610, the best evidence of standalone selling price is the observable price of a good or service when the entity sells that good or service separately. If this is not available, other options include adjusted market assessment approach, expected cost plus a margin approach, or a residual approach. Now let's look at initial measurements, receivables. When receivables are exchanged for goods or services, this gives rise to the questions, how should the exchange be measured? What's the appropriate value for the receivable? By contrast, when an exchange involves cash, cash sets the fair value of the exchange. ASC 310 Receivables offers two options for valuing an exchange. Use the exchange price of the goods or services, or use the note's market value. Now let's look at subsequent measurements, receivable assets. Recall that the initial measurement attribute for receivable assets is present value. For subsequent measurements, receivables are generally measured at their net realizable value. Subsequent measurements of trade receivables and loans can be complex. Measuring customer credit risk involves significant judgment. Measuring estimated credit losses can be complicated by variables such as the unit of account being measured and the use of present value. Let's look at subsequent measurements for inventory. Recall that the initial measurement attribute for inventory is cost. For subsequent measurements, inventory measured using LIFO is measured at the lower of cost or market. The definition of market for this purpose is unique to the inventory topic. Market in this context generally means current replacement cost.